Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from the city of brotherly love, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, well, I don't think you put up that disclaimer. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance.
And the disclaimer was taken down because we had some background noise. Now I'm putting it back up. There's the disclaimer, D.
Okay.
All right.
So, yep. Guys,
Awesome.
You guys always come back and look at that. Let me share my screen. And while I'm doing that, if anyone's joined us for the first time, Will and I, we do these shows in the morning to help answer questions that you may have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we provide a link to Zoom on the live chat on YouTube. So click on that. When you get over to Zoom, click on raise your hand. Once we let you in, you could ask your question live and direct. If you prefer to type in your question, you can type that into the live chat on YouTube. Will's watching that live chat and he'll read them back to me. So while we're waiting for questions to come in and more people to join us, we'll start taking a look at the pre-market report to see if we could get some insights on stocks that are trading in pre-market hours. After we do that, we'll look at any questions. If there are questions that come in, we'll take those questions. If we don't get any questions, we'll continue on our conversations that we've been having from previous days, try to navigate to maybe different parts of the website, use some of the tools, get some insights from them. So let's start out with the pre-market report. Over here, these are stocks that are trading in a pre-market hours. And before I come down here to the list of stocks, just to see what's going on in a pre-market hours from the market breadth point of view, here we see that we're here June 1st. This shows us a count of stocks that are up in the pre-market hours versus the number of stocks that are down in the pre-market hours. So we do see here that 431 stocks are up, 258 stocks are down in the pre-market hours when we compare it to the previous day's close. As far as number of shares, 81.7 million shares that traded in the pre-market hours are higher than are stocks that are higher than yesterday's close. 59.5 million are lower. And if we look at the dollar volume, so these are just number of shares. If we take the dollar volume, $1.7 billion worth of shares are higher. $1.1 billion worth of shares are lower today in the pre-market. And from that market breadth point of view, it looks like it is setting up for a more bullish bias at the open. And let's come down to the list of stocks, see if we could get a little bit more detailed point of view. So as I climb down here, we do have 3 lists of stocks for the pre-market. We have our most active stocks, our biggest percentage gainers and biggest percentage decliners. When I come down here, I see 44 stocks made our percentage gainers list, 43 made our percentage decliners list. So really from that perspective, it looks pretty much like a mixed bag. If we look closer at these symbols, there are a lot of symbols in there that are low cap stocks. So here are the symbols. These are percentage gainers. We come over here, these are the market caps. Oops. A lot of them are low cap stocks. There are symbols in there that are ETFs, leverage products, could be a closed-end fund, preferred stock. Pretty much any security listed on a major US exchange, if it's trading in pre-market hours and meets our thresholds, it could make this list. And we want to narrow it down to a small group of stocks to see if we could get a little bit more focused insight. And to do that, we could use the filters here above. This one in ETF, I'm going to click on that, and you get to choose from a list of ETFs. Some of them are broad-based ETFs, some are sector-based. The first one, SPY, that's the S&P 500 ETF. We'll click on that. The list below gets filtered by stocks that are holdings in SPY, okay, which are the S&P 500 constituents. And if you wanted to, you could also just create a watch list and filter by that, but let's stay with the S&P 500. And here we got 3 stocks made our percentage gainers list, 6 on the decliners. So that looks like slightly bearish bias at the open from this perspective. Again, these are stocks that met certain thresholds that made our list. Let me unfilter this really quickly. I think maybe the one that people have been talking about was this AI, right? It's an AI company. They have different products, for enterprises to deploy to use their AI software. So as all these stocks have been rallying, I think this one was anticipated. They came out with earnings right now down 19% in the pre-market hours. But that's one to keep an eye out because it's been on the news, and as people have been following AI stocks, mostly this one has been one that people have been anticipating with earnings. Let me see. Well, do we have any questions yet?
None have popped up, D.
Okay. Let's navigate to let's go to SPY. And one of the things I'd like to come back to and look is the SPY. It's the S&P 500 ETF, holds the S&P 500 stocks. And just taking a quick look at the profile, and these are the top 10 holdings. So S&P 500 of the biggest companies. It tracks by market cap. And something interesting has been trending. It's been doing it for a while, is that we see a much higher concentration in the largest stocks in the S&P 500. They're making up a bigger and bigger portion of the percentage of the S&P 500. Here, these are the top 10 holdings: Apple, Microsoft, Amazon, Nvidia. Probably just pop because it made such a huge move this year. Now it's in number 4 spot. Google has 2 different classes of stocks, so you could see Google right here. Then you got Meta, Berkshire Hathaway, and Tesla. So it's almost, and all these 10 stocks make up 30.4% of the S&P 500 right now. Now, if we consider that really Google just has 2 classes of stock, we're talking about really 9% of the S&P 500 that make up 30%. And Berkshire Hathaway, it's a lot of it is, it's a holding company, right? It's a company that holds other companies, basically, right? And a lot of their holdings are just stocks, some of these stocks in there. So we could just say less than 9% of the largest companies make up 1/3, almost 1/3 of the entire S&P 500. And this trend keeps continuing. We're seeing it get bigger and bigger and bigger, where people keep pushing money away from other places, and you got hedge funds, index funds, all of them starting to concentrate, and this can become a problem. It's dangerous if you look at these companies, Apple, and they're great companies. Don't get me wrong, they're very good companies, but they're not cheap. You're not talking about these cheap valuations here where, that it's that safe to just put your money in there. I mean, no company is really that safe, but just because they're big and have great products, it's going to become a problem. How high do the valuations get away? Right. And that could always become a problem. But at this point, that's a pretty significant percentage of the S&P 500 that a small group of stocks make up. And one thing, to keep an eye out is that as they get bigger, it draws in the way markets are set up. The way a lot of these indexes are set up is, as they get bigger market caps, it attracts more investment dollars because of the way indexes are set up. So SPY, right, the S&P 500 index, and a lot of these other indexes that are basically cap weighted, it has nothing to do with fundamentals, right? So there's nobody in SPY saying, hey, well, Apple stock has, reached such a high valuation that its fundamentals, it's all out of whack, right? And we should take some of that investment off the table and put it into treasuries. Okay, that's not how it works, right? The S&P 500 index, the SPY ETF, it doesn't do that type of analysis. It just looks at the market cap and says, this is the new market cap, so this gets a bigger portion of every dollar invested into the S&P, as into the ETF, right? So as it gets higher, it actually gets more allocation. So we could take a look, for example, let's see what's going on with Microsoft. So this is Microsoft. Let's go over here. Where is it? So Microsoft has been climbing pretty quickly this year, because of its investments in AI. People are excited about that. It invested into the open AI, which gave it some privileges, because what is now open AI is in Azure, right? And they could build their tools around open AI. The open AI itself is supposed to be a project, non-for-profit, right? That's how it was.
That's how it was set up.
It was set up to be non-for-profit, but they need investments, so they did make this deal with Microsoft that gives it privileges, right?
Yeah, and I think the biggest privilege is the fact that they can now work on top of their cloud, right? I think you just said it, Azure, or whatever it's referred to.
Right, and it's integrated in a lot of their tools, right?
Yeah.
So, but we could see here, these are shares, number of shares of Microsoft held in the ETF space, so in the ETF world, and you can see how it's climbing as its market cap keeps going up. These ETFs are just adding more and more shares into their holdings, and that is the nature of how some of these investment vehicles. This is how they're set up, and I'm not saying that it could still turn out to be a very good investment, and so, but as people get excited and push up the market cap, it forces even an accelerated investment into shares of these stocks. And I think that we'll see how this, plays out. But what is the S&P 500? When you have, a third of the entire S&P 500 is now, less than 9% of the companies. And is it an S&P 500? And what does it get to 50%? Who knows? But it's interesting to watch, because this is the structure of these vehicles. And as more money gets forced into them, this becomes bigger and bigger concentration of invested dollars into a smaller and smaller group of companies. Let me see if there are no questions, Will. Trying to see if I could fall back to any other questions. Maybe I'll bring up the paint.
Well, the doctor who's on today, he actually made mention, I didn't even notice it, the number of holdings. There was no question, but it's actually 505. Maybe you mentioned that. I don't even know. In this, which is interesting.
Yeah. So it's not even exactly 500. It's 504. I think some of it might be cash in there and stuff. But yeah, it's a little bit. I don't know exactly how the entire formula of the S&P 500. I don't think they tell you all of it, but and Google's presented twice in there, right?
Yeah.
Then you got cash holdings, so you'd have to go in there and look at it. But you could say this is really, it has two classes of stock, obviously, but it is one company with two different classes of stock. But here, let's just take a look at, these are the holdings. Let's just see in the last 6 months. So there you go. Meta up 124%, Nvidia up 123.
It's funny you're saying this. I was just thinking to myself, last sell-off, if you had just bought those top 10 holdings, you'd be patting yourself on the back, because they've been the ones
those are the ones that rebounded the most.
Yeah, and they're all of them have, it's not like AI was just created 6 months ago with the exposure of ChatGPT and OpenAI. All these companies have been developing internal machine learning and AI for probably decades. So they all are, minus I guess Berkshire Hathaway. They're all big players in the space already.
Yeah, definitely. I think that the OpenAI really it showed everybody the true potential of it. It was behind the scenes before.
And you still, you say everybody, and anyone who, the chameleons who are on the show obviously are now very much aware of it. And I know Laurent in particular has been using it to write, code for different projects. But I spoke to someone the other night who's an executive. He literally he had no idea. He's heard what's going on, but he had no idea how to use it, what to do. You are way ahead of the curve in the fact that you're using it. Obviously it's being used by millions of people, but it's still, this can be used globally, right? By everyone. It's still just scratching the surface of.
Yeah, and it's not that hard to use. Anybody could just go in there, start using it and get used to it, and you have to, maybe learn a little bit how to ask it questions, prompts, and follow-up questions. And I'll tell you, there have been a lot of technological advancements. We've been through a lot of them. And even the blockchain got people obviously very excited, but the blockchain itself, it's very clunky. It's hard to use. We tried to do things with it, but it was not a simple technology to use or make a use case out of it. Even like just to do something very simple was very hard. So doing a simple project on the blockchain is still not easy. But the AI made everything very simple. They simplified it to, you're like, wow, that, I can't believe it's one of those technologies where, like, right off the bat, you could start using it to make yourself more productive, to find answers quicker, to do certain tasks quicker. um you know and and if you've been around for a while and you've seen how, like, new technologies come up, and they could be really good, but it takes some time to learn them, to develop around them, and to create things and products around them. This one seems like it it really accelerated that process. From the time to adapt to it, it's very quick. um so we'll see. And there are a lot of new apps coming up all the time now with AI. I don't know if you guys follow it, but there are already thousands of new apps um, that are using AI and the open AI technology. So definitely, we're not the only ones. People in almost every industry, from finance to healthcare to, all entertainment, all of them are looking at this and saying that this could be a game changer in their industry. Well, I guess if we don't have questions, really, and that's what the purpose of this show's, to answer any questions. If we don't have questions, I'll just end it there.
Yeah, we did, no, that's good. No questions popping up.
Okay.
We did, Aria mentioned, imagine if ChatGPT shortlists option trades every morning for a half hour before MC's daily talk. Maybe we would have more questions for D. He was saying maybe ask some options question, I guess, to ChatGPT and bring him here. See how Dimitri answers them. That would be cool, Area. Well, thanks everyone for joining. Great job, D, as always, my friend. Actually, I just see Soch came over from Zoom, and he's asked, S&P 500 is slowly becoming the NASDAQ, he said.
Yeah, it's like, let's take a look at the NASDAQ.
Yeah, actually, it's funny. He does say that. That to me, that does sound like the QQQ, right?
It looks like it right here.
Yeah.
So look at the NASDAQ. 60% are the top 10 holdings, right? So it's a bigger concentration.
Yeah, that's just,
You got,
Berkshire's not in there and Broadcom is, right? That's the difference.
And two stocks make up more than 25%. So is this even an index? At what point does it be? It's just a small basket of stocks. Do the other ones even matter? At that point. But yeah, it's same situation here. Now you got almost 60%.
Well, this is a worse situation, right?
It's a worse situation.
In the sense, if you're looking for a balance, some sort of balance in a tech portfolio, you're fully invested in those top 10 holdings.
Yeah, it's essentially, these top 10.
And you'd really be better off creating your own, buying, an equal percent of the top 10 holdings potentially, if you wanted, to own those.
Yeah. I mean, that this just keep, we're watching it, and as we're watching it, it continues to go that way, where the concentration of investments is allocated to smaller and smaller group of companies. And part of it is just the way these vehicles are set up, right? These vehicles are set up that, okay, if there's a new person today that decides to invest in QQQ, right? Well, every dollar they invest, right, 13% of it will go to Microsoft. 12.2% will go to Apple. And so you could see that it's every new dollar, more percentage of that dollar gets invested into a smaller concentration, which pushes the market cap higher. And the higher the market cap goes, the higher this percentage will go, right? So if the other, 40%, the market caps just sit, they're not getting pushed up as hard and as fast, that this will keep growing. We'll see how that plays out, but that is how the vehicle, that's how it's set up. That is how it's set up, and it's doing the right thing. That's the formula for a cap weighted index.
Very cool, D. Actually, Rob gives a shout out to Google Scholar. I don't know if you've ever used that. Obviously, an AI product based around, he was citing some law, I think, in there. But, it's a very, very interesting change in the marketplace in the last 6 months. And
Yeah,
we'll see where it goes. It's going to get better and better. I mean, machine learning is incredible, and the fact that now it's exposed to everyone is really going to change every industry, right? At the end of the day, everything's going to be changed.
Yeah, I think so. Yeah, I think it will.
All right, very good, my friend. We'll end that 3 minutes before the opening. Everyone have a great trading day. Thanks for joining us. We will see you tomorrow on Friday. Great job, B.
All right, thanks everyone. Have a great trading day.